Hey everyone, welcome back to Chipstock Investor. It's Nick and Casey.
Hey, all.
We're going to be talking about analog devices today, or ADI, and this presentation is actually from a CSI live event that we had a couple of weeks ago. You can get access to those via a Semiconductor Insider membership. Check it out on our website, chipstockinvestor.com. We have a lot of really interesting things going over on our Discord server. This week, we're going to be wrapping up some earnings. We have Broadcom. We'll be talking about Salesforce, Zscaler. Had a lot of movement on Pure Storage lately, and so we're going to be talking about that. And most importantly, we're going to be talking about
Asset allocation, portfolio principles that you need to know. That's going to be a live event, a live workshop. We're going to give that a shot and see how the live workshop format goes. Join us.
that's chipstockinvestor.com, link in the video or in the description below. Let's talk about ADI, or analog devices.
Yeah, this is a part of the market we've called out as being hit especially hard by the semiconductor downturn the last couple of years. One of those parts of the market that has not fully benefited from the accelerated computing super cycle that NVIDIA kicked off 3 years ago. But analog devices actually has done quite well managing the downturn. They have a bit of a hybrid model at this point. They actually utilize, as you can see from this chart here, they have their own fabs, the blue dots. They also make use of some foundries, the purple dots, and also some external OSATs in predominantly Southeast Asia to meet their supply needs. So it's sort of an IDM, also kind of a fabless designer at times, depending on the market that they're working with. This is sort of what Microchip has done in recent years as well with some of their closures of some of their fabs. It's not all bad for the IDM market.
ADI has a very diverse end market, consumer, cloud, and enterprise. They are heavy into auto and industrial. They do a lot of design work for all of these end markets. And you can find analog device chips in a lot of stuff that you probably don't even think about. They have a lot of workhorse chips in just about all areas of the economy. One area that we mentioned before, the first time we mentioned analog devices in one of our videos was when we did an analysis of Twist Biosciences. They provide the chip, or at least we think they provide the chip for Twist.
Healthcare, by the way, is an industrial market. I think we often think of industrial like just manufacturing or something like that, but healthcare kind of falls into, I guess if it's like the machinery, like in the bottom right part of this slide here, it would be considered an industrial market. Let's look at some of the specific chips. An analog chip is something that interacts with a real world signal and translates that real world signal into digital language, the language of computers, ones and zeros. These analog things could be literally anything. Things that we can sense, like sound, light, things that we can see and sense, like speed, pressure, motion. Also things that maybe we can't. So a lot of sensors that maybe work with ultraviolet light on one end or red light on the opposite end. All sorts of things like this can get measured and then converted into that digital speak. So everything in blue on this chart here is what ADI does. And then as it kind of fades to gray on the right, you see there where they have the cutoff, FPGAs, CPUs, GPUs, and any application specific custom chip further over to the right. That's not ADI's realm. So everything to the left. And that's what we mean. Some of these end markets have been beat up pretty bad because they're not necessarily 100% correlated to GPUs in the accelerated compute market, but that's starting to change. This is from their CEO, again, actually 3 months ago when we did this review. Up until recently, a lot of these analog chips have not fully participated in accelerated computing, but that is starting to change. Here's why that is, based on this quote.
At the bottom there, you can see he says that there's an interface between the physical and digital domain, like ADI illustrates in that last slide that you saw there. And those chips enable those trends, like, as you see, autonomy, healthcare, energy transition, sustainability. immersive experience, and then AI driven computing and connectivity as well. And here is the outlook from 3 months ago. Revenue was expected to be 2.75 billion at the midpoint, operating margin just over 27%, and earnings per share $1.23, and then on an adjusted basis, $1.92. Let's go ahead and take a look at what the actual results ended up being. Revenue came in at the high end of guidance at 2.9 billion, up 25% year over year. Operating margin over 28%. Earnings per share $1.04, which is up 32% year over year. On an adjusted basis, $2.05, up 30% year over year. So they hit all those markers.
Yeah, on a GAAP basis, the EPS was kind of at the low end of guidance. There's some variable expenses on operating expense that caused that, but on an adjusted basis, they actually exceeded the range that they provided 3 months ago. Right now, that's the bulk of ADI's markets combined, auto and industrial, just over 2 billion out of the 2.9 total. Really healthy sequential growth, 12% for industrial. Auto was the sequential loser at almost 1%, quarter over quarter down. Communications, a lot of that is enterprise and cloud. There's some overlap there, but nice to see finally a sequential increase in that. We think that that will translate over to some of the other companies that participate in communications later this quarter, like, for example, Broadcom. We're hopeful. And then consumer, of course. So sequential, and then, of course, the big one, year over year, at least low 20% growth across the board. Communications up 40% year over year as some of those end market inventories are fully corrected. And now ADI is trying to keep up once again with incoming orders.
Let's take a look at their outlook for Q4. They expect the revenue to increase to 3 billion, which would imply a year-over-year growth of 25%, GAAP earnings per share growth of 59%, and on an adjusted basis, earnings per share growth of 33%.
All right, tell us about the free cash flow, though. This is a big one.
Free cash flow is up 55% year over year from Q3 2025. Even in the midst of some of the downturn, ADI has been pretty solid in their free cash flow. And then their free cash flow on a per share basis now at $7.41, which is a new all-time high for ADI.
Yeah. So stock trades for about 32 times free cash flow at a new all-time high. This is the beauty of that hybrid model, the old IDM model, plus a bit of fabless work as well, utilizing external fab foundry capacity. For us personally, I mean, we've been talking about ADI for years, but for us personally, we never bought, and we would have been better off owning this one rather than Microchip and some other IDMs. ADI has come out on top. This was another solid quarter based on their guidance. They did say on their earnings call, their fiscal Q4, which ends in November, actually tends to be seasonally slow. So the fact that they're still forecasting sequential growth, I think, is pretty indicative of this stage of the cycle. If we kind of correlate this back to our end market cycle that shows auto industrial being at the beginning of a new growth cycle, that's kind of what you would expect at the beginning of a growth cycle. The seasonality doesn't really play a factor. They're so behind on orders that they're just trying to crank out product as fast as they can. Valuation looks reasonable, at least as far as we're concerned. This could be a great core chip stock holding if you don't have one of those and if you're in need of one.